114 years ago, the Wright brothers took the world's first manned flight, and because it was so revolutionary, they found it next to impossible to convince local journalists to cover the event. Right now, as you watch this, 500,000 people are sitting in commercial planes and flying around the globe. A new revolution is just getting started, and fortunes will be made. Blockchain technology is the game changer for the financial services industry. It will rewrite history, but 99% of the population has not even heard of it yet. For the first time since 2009, when the cryptocurrency Bitcoin was launched, making many new millionaires and multimillionaires. Now there's a way to become a pioneer investor and get positioned early using a traditional publicly traded company. It is the bridge between the blockchain world of cryptocurrencies and the stock market. And Portfolio Wealth Global's founder views it as the most significant opportunity in the past 5 years. Go to portfoliowealthglobal.com/must for a detailed exclusive report on this brand new company. Welcome to Cryptocurrencies, the Future of Money show at PortfolioWealthGlobal.com. My name is Michelle Holliday. Thank you so much for joining us today because we have an important interview for you. Our guest today is Jimmy Song. Jimmy has been a software developer for the past 20 years, with the last 4 years focusing as a Bitcoin developer. He is an entrepreneur and host of the very popular show called Off Chain on the World Crypto Network. When it comes to cryptocurrencies, he is a wealth of information, and I am thrilled to welcome him to the show. Jimmy, thank you so much for being here. How are you today?
I'm great. Thank you so much for having me.
Jimmy, from your perspective, is the ICO space now the largest bubble in the cryptocurrency world? People seem to be getting scammed left and right. And as a side note, I want to add for our listeners that the first blockchain publicly traded company began trading on September the 18th. Our subscribers at Portfolio Wealth Global have a free newsletter and got the alert at 74 cents. It doubled on Wednesday. Tom Beck, founder of Portfolio Wealth Global, wrote a detailed report for all of our viewers at portfoliowealthglobal.com/must. But Jimmy, what are your views on the ICO bubble in the cryptocurrency space?
Yeah, it definitely looks very, very frothy. I'm sure there will be some good ideas that are in it, but it reminds me a lot of Kickstarter and things like that, where it's very popular at the beginning, except a lot of these ICOs don't have a revenue plan afterwards, right? Like it's kind of like starting a restaurant and raising the funds for the restaurant by selling all the seats to the restaurant, and there's no sort of continuous revenue afterwards. So for me, it's not a business model that's really proven itself yet. Obviously, there have been a lot of successful ICOs, Ethereum chief among them, but it's very difficult to say like when a bubble will pop. I do feel like there's a lot of people that are sort of coming into the space just to raise money on the backs of people that want asymmetric payoffs. It's definitely unsustainable given the amount of greed on both sides, both by the people that are issuing the tokens and people that are buying the tokens. They're both expecting sort of a pop, and this is kind of what happened with the dot-com bubble. It's great until the party ends, and at which point it goes into a really long bear market.
There do seem to be a huge amount of ICOs coming into this space. Jimmy, do you have any sense of where they're coming from?
Well, I imagine they're mostly coming from people that can't really raise money through the normal VC or, Series A or Series B or even public channels. I know, for example, that Kick, they're an app that was they were trying to raise money through the VC world, couldn't, and they decided to do an ICO. So right now it's being seen by a lot of people as a path to get a lot of capital very quickly. And for a lot of people on the other side of the equation, the investors, they're seeing it as a possible way to make money very quickly. So, like I said, it's greed on both sides. I really don't like those kinds of incentives in a system because that just encourages a bubble, and a lot of people will, get burned for their greed, I guess.
Now, Jimmy, have cryptocurrencies given the common person the ability to finally take control over their own money?
Yeah, I think so. I mean, the whole idea of Bitcoin is that you could be your own bank. In the past, when you had money or gold or whatever it was, you would have to deposit it with a bank because they could keep it secure. The thing about Bitcoin that's really nice is that it's really a lot easier to secure than a bar of gold. If you have a bar of gold, you could put it in your safe or bury it in your backyard or what have you. But there's no guarantee that you'd be able to keep it because somebody can come in and take it or whatever. With Bitcoin, you could back it up. You can shard the keys, and you can make it like 4 of 7 of these people have to agree before you can move it. You can do all sorts of things that are more friendly towards security. So in that way, the common man can, sort of secure it on their own and be their own bank. Now, that's not to say that most people should. It's very stress-inducing to, take possession of your own wealth. And most people in today's day and age aren't used to being responsible for a lot of money that they have to secure on their own. So that's not to say that that's the right solution, but it does give you the ability to do that without sort of taking enormous risks on getting your stuff stolen.
Everyone's grown up with banks, and it just makes you feel safe. And so this is completely different.
Yes, it's very different because you have to take control of your own wealth. But let's remember, the reason why we got into a lot of these financial crises is because banks can lend out on a fractional reserve basis. So they don't actually have your money. They have some fraction of it that they have to keep for FDIC insurance. But for the most part, they lend out, some multiple of whatever you deposited. So it's not really there. And this is the problem with sort of a centralized place that takes your money. They can fractionally lend it, and that sort of degrades the quality of the money that you have. And it's really just a promissory note that they'll pay you back, and it's backed by the U.S. government with, FDIC insurance or whatever. But with Bitcoin or other cryptocurrencies that you take possession on your own, you definitely have it because it's a bearer instrument. So that's in that way, it's a lot better and a lot more secure and a lot less dependent on sort of a systemic trust that you need to have in order to, trust that the bank will give you the money back.
Right. Now, Jimmy, with $5 smartphones just months away, will third world countries adopt blockchain and never need to use the dollar system again?
That's a great question. It's an open question because I'm not sure there's enough transaction capacity if people are using it sort of as a medium of exchange, which is generally what people think about when or what they're talking about when they're talking about third world countries using it. I would say that for a lot of them, it's a better store of value than, say, medium of exchange. Ask anyone in Venezuela or Zimbabwe, where their currency sort of inflates very quickly. It's very hard to find a good store of value. So in that way, it may get used because if you have a smartphone with capabilities like a Bitcoin wallet on there, you can take possession and you can back it up and you can do all sorts of things with it. And, it still requires a passcode in order to spend it and things like that. And that's very, very good, right? It allows you to, possess it and be able to transact with it. I'm not sure that the Bitcoin blockchain in particular has that capacity, at least not without second layer protocols like Lightning Network and payment channels. But it's definitely opening the door to that possibility. And if there's enough demand for that sort of thing, I believe the engineering will get there.
What are we referring to when we're talking about scaling problems, and how is it being remedied?
Yeah, great question. So if you think of Bitcoin as a ledger, there's sort of a limited space on the ledger, right? Like every 10 minutes, there's a megabyte. You can think of that as sort of one page on the ledger every 10 minutes. And that limits the transaction capacity of the network. I think somebody figured out it's something like 3 transactions per second if we do that. That's not nearly enough for the entire world to be able to use it. And this is one of the reasons why there's a big scaling debate. And if you want more people to use it, you need to increase capacity. So there are multiple ways to do it, and there's been a debate for the last 2.5 years or something like that on exactly how to achieve that scale. It looks like Bitcoin Core, at least, is going towards a model where you can have a layer on top of Bitcoin, where you can have a significantly more transaction capacity. There are others that think that on-chain capacity is enough, and that's the direction that they should go. But that's what we're talking about with scaling. It's transaction throughput. PayPal or Visa or something like that, they do something like 50,000, or they're capable of doing 50,000 transactions per second. I think even on Black Friday, which is the busiest day of the year for somebody like Visa, they do about a third of that, or 13 or 14,000 transactions per second. But clearly, Bitcoin at 3 transactions per second is nowhere near enough if we want to get to that scale. So that's something that a lot of people have been talking about and figuring out how can we do this in a more efficient way. So that's what the scaling issue is.
Jimmy, please explain how all cryptocurrencies can be exchanged and how they can basically interact with each other.
Yeah. So crypto, there's a lot of different cryptocurrencies. Bitcoin is just one of many. It's obviously the biggest one, but there's, Ethereum, Litecoin, and Monero, and all these other ones. And you can sort of change, you can trade between them. You can trade from fiat money, or this is like sort of talking as a cryptocurrency advocate, I guess. Mm-hmm. But, by fiat money, what I'm saying is, like a US dollar or euro or Japanese yen or Chinese yuan or whatever. You can trade between those usually using what's called the Bitcoin exchange, or, an altcoin exchange or whatever. You can also trade between different cryptocurrencies using, and what's called an altcoin exchange. There are many of those. Poloniex and Bittrex are 2 of them. Shapeshift is another. But yeah, there's sort of 2 categories of these things, and you can usually buy Bitcoin or Litecoin or something like that using a traditional exchange like Coinbase or Gemini or Itbit in the US, and there's many other ones abroad. Kraken's one in Europe, and I think Bitflyer is one in Japan, and Bitsum is one in Korea. I think that most of the Chinese ones are shutting down, so I won't mention those. But there's a lot of different ways in which you can get it. But generally, there's an exchange rate, and you can just pay to get a Bitcoin or Ethereum or whatever. And then, if you wanted to go for one of these smaller altcoins or, ICO tokens or what have you, you can go to one of these altcoin exchanges and exchange Bitcoin for those.
Now, you mentioned the situation in China. Does that have you concerned at all?
Well, it looks like they've pretty much shut down every exchange, and they've given them something like the end of September. I think for other exchanges that are especially big, they're given till the end of October, basically to shut down. And it is a little bit scary in the sense that a lot of the exchange CEOs are now not allowed to leave the country, which is kind of scary, especially given how authoritarian China tends to be. That said, China's been banning Bitcoin in one way or another since like 2013. And what I've noticed is that each time they sort of quote unquote ban Bitcoin, the price gets affected less and less. So initially it resulted in something like a 60 or 70% drop. And then, as they did it more and more, the market sort of immunized itself against it. I would guess that back then, by the way, China had a much larger portion of, Bitcoin trading. Right now, they have dropped significantly. They're at like 5 to 10% of world Bitcoin and altcoin trading. A lot of that volume actually has moved to their neighbors, Korea and Japan. So I imagine that as this plays out, what China will end up doing is they'll have sort of licensed exchanges, and that they'll eventually get back some of the volume. But for now, I think most of the ecosystem is okay with them sort of going away, because it was sort of like a risk factor with the Chinese government sort of imposing its will on Bitcoin. So now that that's more certain that, Chinese exchanges will go away, it's better for Bitcoin in that way.
Do you think that China has an agenda? Some people speculate that they're going to issue their own government cryptocurrency, and so they want to get rid of what's taking place right now. What are your thoughts?
Yeah, that's entirely possible. My gut feeling is that it's an authoritarian government, and what authoritarian governments hate more than anything else is stuff that they can't control. And Bitcoin and Litecoin and all these cryptocurrencies are things that they don't have that much control over, and by regulating it, they can get more control. My gut feeling is that they're going to have a licensing process, not just for exchanges, but for ICOs as well. If the cynic in me would say that, a lot of Chinese bureaucrats need their bribe money, and this is why they want to have this process. But, if I'm not being cynical, it's just to, protect their public against sort of fraudulent things, and that's okay. I think it will come back eventually, and it's not anything to worry about. And if volume drops off in China, it will pop up elsewhere, because the demand for Bitcoin and crypto is pretty high right now, and I don't see that changing that quickly very soon.
Now, Jimmy, can the blockchain itself be hacked? Do you know of instances where some cryptocurrencies have been actually hacked?
Sure. The biggest one that we know of is the Ethereum DAO hack. DAO stands for Digital Autonomous Organizations, and the idea behind it was that everyone would just pool their money, and they would use some algorithm to figure out what to invest in or something like that. Turned out there was a flaw in the smart contract, and people were able to just sort of steal the money, and in response to that, the Ethereum developers decided to do something called a hard fork. That resulted in Ethereum Classic being sort of a branch of Ethereum, and it still trades today. So it is possible, if you sort of have a complicated smart contract language that Ethereum does. Bitcoin's is a lot less complicated, so it has less of what you would call, from a security perspective, as an attack surface. It's less vulnerable, right? There are less places that you can attack it. It's not sort of surrounded on every side with different, organizations trying to attack it. It's obvious where you need to defend yourself, and Bitcoin developers have done a great job in sort of defending themselves from the possible attack vectors. So there haven't been really any hacks on the blockchain. It's because it's secured by math. Cryptography is a well-known field, and it's been studied for almost 40 years now. And mathematicians have been trying to crack the what's called the discrete log problem, and hash pre-image problem, and nobody's been able to do that. And this is the same technology, by the way, that secures websites. So when you log into your bank account using your web browser, it uses cryptography to make sure that nobody that's listening in on the traffic in between can decipher what your bank balance is, or even your password or anything like that, and be able to steal money from your bank. If any of this stuff gets broken, we have a lot more things to worry about than just Bitcoin being broken. You'll have pretty much broken the entire internet. So in that way, Bitcoin is very, very secure, and there aren't really easy ways to hack at it without some really, really crazy math being broken.
Okay. Now, Jimmy, where in the world do retail businesses accept Bitcoin the most? And can people order online with Bitcoin to purchase a wide array of products as of yet?
Sure. There's a lot of retailers that take Bitcoin. I think Expedia and Dell and Overstock are some of the ones that take Bitcoin. I think Newegg at one point took it, and Tiger Direct tend to be, a little more on the techie side, obviously, given the demographic of the people that tend to own Bitcoin. But that's just some of it. There's also another vendor called Purse.io, and they allow you to purchase things on Amazon Amazon using Bitcoin for a discount. So you can use Bitcoin to purchase something on Amazon for something like a 10 to 25% discount, which is great. I use them all the time, and they're a great service. It might take a little bit longer to ship because it requires somebody utilizing Amazon gift cards to sort of ship you the stuff, and it works great. But yeah, and obviously, if you can get it on Amazon, you can use Purse to get it. So there's a wide array of stuff. That said, I mean, I would caution against using Bitcoin as a medium of exchange right now, just because for a lot of people that own Bitcoin, they tend to end up regretting using Bitcoin as a medium of exchange. All the Bitcoin that I have ever spent, I kind of regret now. Like back when Bitcoin was like $400, I bought like $40 worth of beef jerky. Now, it was great beef jerky. I love the beef jerky.
But it was expensive.
Yeah, now it's, that was $400 of beef jerky. So,
right.
So a lot of people end up sort of regretting it. It's a better store of value. And I think that's sort of a property of sound money, is that it makes you want to keep it. So that's something, that's sort of a caveat for your listeners.
What is your price target for Bitcoin, and how would you arrive at that number?
Great question. I don't really have a price target per se, but I will say that in general, Bitcoin has very strong network effects as a store of value. Because of the 21 million coin limit, it makes people want to hold it because they know with certainty that if they own one Bitcoin, it will always be 21 millionths of all of the Bitcoin out there. And there aren't going to be any more. And you can contrast that with sort of the US dollar, where they're seemingly printing more dollars every day, and you have no idea 20 years from now what a dollar will actually be worth or what goods or services you can get. So in that way, as more people own Bitcoin and more people use it as a store of value, it becomes a better store of value because more people are willing to see it as a store of value. And in that way, I think it sort of goes to sort of this networking law where the more people utilize it, the more valuable it becomes, and it becomes like sort of this virtuous cycle. I definitely believe that, from a price perspective, there are orders of magnitude to go before it settles on any amount, and it's been doing that for the past 6 years, and throughout its life. It started in 2009, so it's really the past 8 years. And I believe that it has the potential to grow in that fashion for a long time. That said, I'm not really an economist. I'm just sort of like a dumb coder, and take my word sort of with a huge grain of salt, and sort of do your own due diligence on this stuff from an economic perspective.
Well, I think you're a little bit more than a dumb coder. Please tell us, are there any things coming up which may affect the price of Bitcoin, which our listeners may like to know about?
Sure. So as part of the scaling debate that I mentioned before, there's something called the 2x hard fork coming up around mid to late November. Now, there was something similar called Bitcoin Cash back on August 1st. And the price of Bitcoin right before then was like $2,700. And right now it's Bitcoin plus Bitcoin Cash trades at around something around $4,500. So that sort of event ended up actually increasing the price, though a lot of people thought it would go down. And this sort of has a similar feel. There's a lot of people fearing that a split in Bitcoin as a result of the 2x hard fork may cause the price to go down. But I'm of the mind that anything that doesn't kill Bitcoin tends to make it stronger. And because there's a lot of developers in the space that are immunizing against sort of things like a hard fork, it tends to make it a more secure coin and increases its value as a store of value. So I believe that, that may actually increase the values, but nobody's really sure. But there's definitely an event coming, unless, a lot of people back down from some agreements that they've made, which doesn't seem likely to me at this point. But the 2x hard fork is mid to late November. There's a specific block number that it will happen at, and we'll know sort of closer to the date exactly when that will be. But that's going to be a major event.
Yes, something to definitely watch for.
Yes.
Now, Jimmy, I know that you have a great class coming up. Please tell us all about it.
Sure. So one of the things that I've noticed about the Bitcoin space is that it is very dependent on developers, and that tends to be sort of the bottleneck for ecosystem growth. You have a lot of people that are willing to put in money, but not a lot of people that sort of know the technology enough to be able to build things on top. And I'm not just talking about sort of Bitcoin core development, but also wallet development, exchange development, payment processor development, all these wonderful tools that people are making. There just aren't that many programmers that can do it. So I created a course called Programming Blockchain. It's a 2-day seminar where I teach sort of developers that want to get into the Bitcoin blockchain space how to program this stuff, and all the ins and outs of Bitcoin development I talk about and sort of give them exercises on how to do things. And I have the next one coming up in Santa Monica. That's going to be October 12th and 13th. I also have another one in San Francisco that's going to be October 31st and November 1st. And then I will probably do some internationally, maybe in Asia and then in London or something like that. But there's definitely a huge demand for developers. And if this is something that you're interested in, or if you're in a company that needs to train developers, this would be a way to train them without causing them too much effort and just sort of learning from the ad hoc resources that currently exist.
Well, this has been an amazing interview. I want to thank you so much for taking the time to share your knowledge and expertise with us today, Jimmy. Now, how can everyone follow you, connect with you to stay up to date with you? And most importantly, how can they access your classes? Do you have to register online, or what do they do?
Sure. So you can follow me on Twitter at Jimmy Song. You can follow me on Medium at Jimmy Song. And I publish a lot of articles. I also tweet a lot. As far as Programming Blockchain, the website is programmingblockchain.com. You do have to apply to be a part of it. And that's on purpose, because I don't want to be training anyone that's completely clueless on what this stuff is. I'd like to train people that have enough of a background that this class would be valuable for them. We do have a partnership with PinkCoin that I literally agreed to yesterday, which is that if you can't afford the class and want to take it, PinkCoin is offering a scholarship to one lucky recipient, and you will be required to fill out an application for that. That's also on programmingblockchain.com, and you can apply there.
Wonderful. Can you go a little bit more into that, just very briefly for our viewers?
Sure. So PinkCoin is, they do a lot of sort of charitable stuff related to cryptocurrency, and they are willing to sponsor somebody that's talented and wants to get into this space to learn Bitcoin/blockchain stuff. And they will get a free admission to my class in Santa Monica on October 12th and 13th. And, PinkCoin will pay for the admission. Now, you may want to be in the LA area because they're not going to pay for travel or anything. But, it's a great opportunity. You just have to fill out an application. There's some questions on there that we'll use to evaluate who we're going to take. There's a programming question and sort of like, what do you want to do with the knowledge that you've learned. And obviously that's going to factor in, and PinkCoin and I will decide on who gets the scholarship, I think by October 4th or something like that. And that it's sort of a great thing. They do a lot of a lot of charitable things like that. So very excited to have them on board with this.
And to become part of just an exploding industry.
Sure. Yeah. And it's, there's so many companies that are looking for blockchain developers. So this is an investment in your future if you happen to be a developer.
Jimmy Song, Bitcoin developer, entrepreneur, and host of the amazing Off-Chain Show on the World Crypto Network. Thank you so much for being with us.
Thank you for having me. It was great.
For Cryptocurrencies, the Future of Digital Money Show, my name is Michelle Holliday at PortfolioWealthGlobal.com. Thanks for joining us today. Portfolio Wealth Global releases expert interviews weekly, and we're focusing upon the blockchain in September as the first ever publicly traded blockchain company began trading. Our exclusive report on this can be accessed by going to portfoliowealthglobal.com/must, M-U-S-T. Here are 5 ways that the blockchain is changing our world. Number 1, sharing economy. Blockchain technology provides a secure and superior system for record keeping and managing digital payment history. We believe blockchain could help accelerate the adoption of P2P lodging, Goldman says, and generate $3 to $5 billion in incremental revenue opportunity through the year 2020. Number 2, electricity. As you know from your own substantial monthly electricity bill, most homeowners and renters rely on power from big central utilities. But some people are moving toward rooftop panels and battery-generated electricity, and that means that they could potentially act as power providers to others. Goldman imagines blockchain helping to facilitate secure transactions of power between individuals on a distributed network who do not have an existing relationship, and the report estimates that it could be as much as a $7 billion innovation. Number 3, property title insurance. Here's another truth well known to you if you own a car, a home, or any other property that you have insured. The title search process is long and expensive. High fees abound. If the process of title insurance is taken to the blockchain, it could reduce costs to the provider and in turn fees passed on to you. By reducing errors and manual effort, Goldman says, to be sure, this bullet point in the Goldman report seems like it could be subbed for any other financial transaction at all. Insurance is hardly the only process where delays and human error can be reduced to lower costs and less fees. Number 4, trading stocks. This is the use case that most commonly is touted by folks in banking looking to try the blockchain tech. An estimated 10% of stock trades are subject to small human error in the process, which can make a stock purchase or a trade take longer to settle. The appeal of the blockchain is in speeding up such transactions. By using blockchain to record clearing and settling equities trades, Goldman estimates that the industry could save some $12 billion in annual costs by moving to a shorter and potentially customized settlement window. 5, preventing money laundering. This may be the least sexy of the 5 scenarios, but blockchain tech could help the KYC, Know Your Customer, and AML, anti-money laundering compliance efforts. By storing your account information on a closed blockchain, it could reduce the number of invalid or fraudulent transactions that get through. Again, Tom Beck, founder of Portfolio Wealth Global, has made it so that our top-notch research is completely free. Go to portfoliowealthglobal.com and subscribe to what is ranked as the world's #1 free financial newsletter in quarter 1 and 2 of 2017. Thanks for tuning in today for Cryptocurrencies, the Future of Digital Money show. I'm Michelle Holliday at portfoliowealthglobal.com.